All right. I'm excited to have this conversation because we're talking about 30 years of Insight. And I joined Insight straight pretty much out of school in 2003. And so that was like 22 years ago.
And I only joined in 2000.
Yeah, so it just shows how old I am.
This is particularly exciting for me, and thank you for having me to be interviewed by somebody who used to work with us.
Yeah, those would be fun.
Yeah.
And before we dive into the journey of Insight, where Fund 1, $30 million fund, Fund 13, $12.5 billion, it's a few billions, I guess. Talk a little bit first, like young Deven, before you even got to Insight, like the journey into thinking about even having a career in venture capital.
Well, I like to think I'm still young Deven, but I think that it's very improbable that I'm here. I started out studying. I was a science geek. I went to college thinking I was going to study biochemistry.
Yep.
I kind of competed in international science fair in high school, so I'd really know business was not even on the table. And this is kind of and this is the advice I often give my kids, is you let a little of serendipity into your life. And my roommates were all Wharton, and I wasn't. And so I kind of got sucked into the dark side.
Yep.
Ended up out of college going to Blackstone, and ended up being at a boutique where I met Jeff Horing and Jerry Murdoch, and kind of the rest is history. So this was not the master plan.
Not the master plan.
Yeah.
So what was the original vision of Insight when you joined? Like, describe the firm in 1999, 2000. When
I joined the firm, they had Fund 3 had been raised. It was a $300 million fund. And actually, my predecessor firm called Berenson Manella Company is where Jeff Horing and Jerry Murdoch, who were the co-founders of Insight, actually met each other. And we were backing them in kind of raising that fund initially. And the strategy was simple, that software was this big industry, and not big as it is today, but a growing big industry. And there was a lot of early stage capital, but there wasn't really a lot of growth capital, capital that was really used by companies to invest in sales and marketing and growth. And that's really what it was. At the time, the transition was happening between mainframe to client server. Mm-hmm. And we were kind of backing the next generation companies that were going for that, making that transition. And over the course of the next 25 years, we've continued to fund different transitions from client server to cloud to mobile to AI. But every transition leads to kind of a new set of companies to back.
Yeah. I want to ask a question that I know is on a lot of folks' minds. $12.5 billion fund. You invest from like $5 million Series A's to like $500 billion buyouts out of
not 500 billion, but yeah,
500 billion,
yeah.
Maybe you're there.
Yeah.
No, but how does that work out of one vehicle? Like, how do you manage all that?
Well, let me start with the end, and then I'll get to the beginning of how it works. In the end, the most important thing is each strategy contribute to our overall returns? And that, to me, is really the driver. If you think about every one of our strategies, from Series A to buyout, has had a capital gain of north of $1 billion, right?
Yep.
Every single strategy. And obviously, some of those strategies multiple times. If you look at the top 10 capital gains in our history, and that's dollar capital gains, so each one's at least $1 billion, and they're multi-billion-dollar gains. Half of them started with a first check of less than $50 million, right? So a lot of these small checks have actually led to large gains. It gives us the ability, with a large fund, to see what's working and double down on the things that are working really well. And that's what we call it with our LPs, is our double down strategy. How do we find winners? How do we find them early? And one of the advantages we have being a big fund is we can take that $10 or $15 million check, and if it doesn't work out, it doesn't really affect the overall performance of the fund. But for the ones that do, we have the ability to deploy significantly more capital, and we have lots of examples of that across the portfolio. And
how do you go about making sure to manage your time and the investment professional's time around some of those early checks where you're hoping that they potentially work out, and say if they don't, then you can't double, triple down, and you start building up a portfolio of some of these companies? Because there's discipline around how you get their jobs, like time management against how you work with these companies, but also spend time with these founders that you made this commitment towards in terms of giving them capital. How do you guys manage that balance?
And I think that last point's a really important point, because referenceability is key.
Yes.
both with getting the next deal, but also with investors. And so we kind of have a really firm commitment that if we say we're going to do something, we're going to do it. So like, how do we do that with 500 companies, which is what we have today? And our largest group at Insight is Onsite, which is you're familiar with that, which is our consulting team, in-house consulting team. That's north of 125 people. That group is broken into working with 3 types of companies: early stage companies, mid-stage companies, and late-stage buyout companies. So we have dedicated teams from recruiting, marketing, sales that serve the stage company that they are. That's not how we started. And it didn't work so well when you had somebody who was really experienced with a $500 million revenue company giving advice to a company that doesn't yet have product market fit. Right? So we segmented that and kind of institutionalized that to have groups that focus on kind of each size of company. And by kind of doing that, I think we've been able to do a much better job on that. The other thing we're doing is that we can actually programmatically create a lot of content that's applicable to a lot of companies, right? So all of a sudden you're doing a marketing forum and you're having hundreds of companies leverage that work once. Things like you do like this, you can do for CEOs, for marketing, sales, each functional area. But we spend a lot of time, we do a quarterly NPS with our portfolio companies on our service. Because we really think of ourselves as a service provider.
I want to shift gears a little bit to another key aspect of your strategy, which is the deal sourcing program. One that I went through in 2003, where the job was, okay, there's a phone, there's a computer, you got a brain, figure it out, and literally just dialing, sourcing 100 calls a week, week in, week out. And there's some folks probably here that kind of went through that program, and it's tough. Like, it feels like you're getting your teeth kicked in to a certain degree. But I'd say the value of that sourcing sort of approach, and what at least has done for me as an investor, is paramount to, I think, where I am today, because having those reps and being able to spend all that time talking to founders. But it's a hard job. So let's talk a little bit about, one, just the way you've managed the program over time, where is that today, and even a little bit of the diaspora that you've seen in terms of the analysts that have gone through it all.
Well, I mean, I'll start with the last, and one of the pleasures of today, I've been trying to take a picture of every Insight person who has their own fund who's at this conference, and the funny thing is that actually takes some time. And I with the light, I can't see who's actually sitting here, but you've got Vinny from Left Lane, you got Nick Hill from Footwork, you've got John Monagle, you got Namdi. These are all people who started in our analyst program who all have their own funds, all of them doing great. So I think that the training that's come out of that program, I think, has been good and it's been powerful. We started with a single analyst. My partner, Mike Triplett, who came out of Summit, hired a single analyst, Matt Schlau. And the funny story about Matt Schlau is I took him out on his last day and I said, Matt, like, what are you going to do next? And he's like, I'm going to medical school. And then after medical school, he went to the Peace Corps. So the joke at Insight is we took all the capitalism and squeezed it out of him. But I think that over time, today we hire between 11 and 14 right out of college. Typically, we hire them as summer interns. It's a try before you buy both ways, meaning we're making a judgment as to whether or not they'll be good at the job, but they're also making a judgment as to whether or not that's a job they want to do, and it's not for everybody. But today, I think we're making their jobs, you still need the ability to build a relationship with an entrepreneur, and they're still doing that. What AI and other tools that we're giving them allow them to do is spend less time figuring out who to call and spend more time figuring out what they're going to say. When Jeff Horing and Jerry started the firm, they would literally there were piles of magazines at the Insight offices, piles. And they would rip help wanted ads out of them and cold call them themselves. Right.
Yes.
And then they started ripping them and handing them to analysts and associates.
I remember those, getting bags of really ripped out magazine ads, and then there's
bags of magazines.
Call these people.
Now today, of course, you don't need bags of magazines. There's other ways to do it. You can go to conferences. You can use AI. But the fundamental skill of getting somebody on the phone and convincing them that they should work with us is, I think, a really, really critical skill. And I think it's one that's really allowed a lot of people both at Insight to blossom, but also outside of Insight to blossom.
And I want to talk a little bit about how still you've done a great job with regards to just retaining, and a lot of the team that was there when I was there, they're now, and they've been sort of MDs, and you just had this cohesion amongst a senior leadership team that's been there for many years. Like, what have you done from just overall culture perspective to just kind of create that dynamic where you've been there for since '99, and many other folks, Ryan Hinkle, others of Triplet, still very active.
Yeah, but then more importantly than the me and the Triplet and the Liebermans are people like Ryan Hinkle, who I hired as summer analyst, who's now in the investment committee, right? Matt Gatto on the investment committee. And they started as summer analysts or analysts. I think, look, this business, you can only keep great people if you, A, give them enough rope to kind of go do their own thing. You have to give them more responsibility, and you have to give them more economics.
Yep.
And the challenge in this industry, of course, is, and we've been fortunate that we've been able to raise amounts of capital that has allowed us to do that. I think one of the challenges in this industry is when you have fund sizes that are flat, and you're trying to bring new partners, you're trying to keep people, other people have to be willing to let go of economics, otherwise the model doesn't work, right? And I think that by being able to raise larger funds, we've been able to give people significantly more economics over time. But I don't think economics is enough. It has got to be economics and empowerment. You need both. People really have to feel like they're running a team. Matt Gatto runs his own team. Ryan Hinkle runs his own team. I'm not looking over his shoulder. Nobody's looking over Matt's shoulder. We are as an IC, but they're on the IC too, right? Yes. So they're looking over my shoulder too. And so I think the economics are important, obviously, but I don't think people, when you look at any study, any HR study, like 75% of people say they leave for money, but they don't really leave for money. Money becomes the excuse later because it's easy to tell somebody got paid more, but they generally leave because they're unhappy with their manager, they're unhappy with the responsibility, they're unhappy with how much they've been empowered. And so I think both of those are critical. One's not enough.
Yeah. And the one thing I've heard a number of other more junior investment professionals say out in the wild is that you've been a great mentor to them. So how do you think about mentorship and the role of mentorship as you're grooming the next kind of class of investor? Because this is a job that a lot of it is knowledge is passed down from experienced professionals that have done that while also putting reps on the field yourself. So how do you manage this mentoring of some of the team that you've hired, especially since there's so many folks that you have hired?
Yeah, listen, I'm probably most proud of the fact that I'm still mentoring some people who didn't make it at Insight, right? And they didn't make it at Insight, and I worked hard to make sure they got something else. They've all done great in that new thing, because I've always think that just because you don't make it at one place doesn't mean you're not great. It just might not be a fit. And I think if you're as you're giving people advice, if they feel like I just gave a talk about feedback at our internal summit, like training the VPs and principals on feedback. And I said it took me till like 5 years ago to figure out that that you need to give people super honest feedback, that you're not being fair to them if you don't give them super honest feedback. But you have to do that in a way that they also still feel that you're in your corner.
Yeah.
So if you give somebody tough feedback and they think you're giving them tough feedback because you want to be more important to them, because you don't want to give them a raise, you don't want to give them more carry, they're not listening.
Yep.
But if you give them feedback and they feel at the end, and it can be really hard feedback. I've given some people really hard feedback. But at the end, they feel like I'm giving them that hard feedback, but I want them to win.
Yeah.
And I want them to be successful, and whether that's at Insight or somewhere else. So I just think it's like, and it sounds like motherhood and apple pie, but I really do feel like mentoring is like, you can really only mentor somebody if you genuinely care about the outcome.
Yes.
Right? Like just saying, I'm going to mentor somebody, like only do it if you really care about the outcome, because people are pretty good at figuring out whether or not you're on their side or not.
1,000%. Let's shift gears a little bit. You're software investors. We're remiss if we didn't talk about AI. And so how are you guys thinking about your AI strategy and how you're thinking about the world in which we're kind of evolving into, and where you're investing and allocating dollars and resources? What excites you?
Yeah, we think about AI three ways. I mean, obviously we think about how can we use AI at Insight. Sourcing would be a great example of that. Doing research would be a great example of that. I mean, those who haven't tried OpenAI's deep research or one of the other deep research project. I encourage you to try those out. The second is the portfolio companies using it, right? So that's both for cost kind of reduction type plays, but also, if you think about when you went to offshoring, basically call center offshoring, you reduce costs, but you also reduce customer satisfaction, right? Nobody really wants to be on a call center, in India. The interesting thing when you put the chat when you put AI chatbots in, not only does cost go down, but the customer sat goes up.
Yeah.
Right. So is like, Vinod Khosla talked about this earlier, that you're gonna, these technologies are gonna replace people. Those are probably the most powerful ones. I agree with that. But you're not only replacing people, you're giving them a better experience, right? And that's a pretty powerful combination that hasn't really existed before. And then the third, obviously, is we're an investment firm, so it's investing. I think it's been exceptionally difficult to find interesting things to invest in because of valuation in the AI space. I think Vinod said earlier that he thinks 80% of these deals are going to lose money. I don't have a specific prediction, but that prediction didn't surprise me. I don't think he said 80% of companies will fail. He said 80% of those companies won't make money as venture investments.
Yeah.
Right? And I think you've got, you just had Ilya, one of the co-founders of OpenAI, raised money at a $30 billion valuation, pre-product, pre-revenue. I don't even know what the investment memo could say, that could justify that. So I think that there's going to be some tears, in this space. But I think what we're trying to figure out is that's an example of a case we're playing early, we're okay with, right? A $10 or $15 million check, get in early. Yeah, maybe you're paying a little bit of a high price, but you're taking a measured amount of risk. And then just really trying to see the companies that we already have. We think there's a lot of companies where we think we can kind of accelerate growth using AI as a driver.
Yeah. I know we have about 5 minutes left. I'd like to shift a little bit to call it the next 5-10 years of Insight. What excites you about the future? Where do you think Insight's head? Anything, just give us insight into the future of Insight.
Well, look, today, we actually do have, three kind of distinct areas that we do have our kind of our main fund that does what we talked about, kind of Series A all the way to buyouts. We have a structured equity fund, which focuses on really much more kind of mature companies with high cash flow, where we can get more of a structured type return. And then we actually have a public business, right? We have a public manager. And that's been interesting because, I think the public managers bring a really, really different perspective on how they think about companies. And for example, we just co-led a round in Databricks. That happened because of the public team, right? It was a public team spending time with that company that kind of led that deal to happen. So it was a very really interesting synergy. So I think it's how do we, in the markets that we know the best, and we're not trying to go be healthcare investors or something else, but in the markets that we know the best, how do we kind of continue to innovate and provide all the relevant solutions? But just to use an example of something that's maybe different, though we've been doing it for a while, if you think about what's the biggest, many of you are out raising money, the biggest challenge is where's your DPI, where's your liquidity, how come I don't have liquidity? And there's been 10,000 companies funded in the last 7 or 8 years. The vast majority of them are not going to go public. The vast majority of them are not going to find a strategic investor. And we're going into those situations and saying, fine, we'll buy them. And we're going to treat it as a venture buyout. We're not going to use leverage. We're going to take control of those companies. And the reality is a lot of these companies have super disparate cap tables, and they're not that well managed. They're not that different than Thoma Bravo taking a public company private because you've got misalignment between management and the public markets. Well, here you have misalignment because you're in the A and he's in the B and that person's in the C and you're in 3 different prices. Nobody really is driving. And so by taking control in those situations, we can kind of put management in place. We can rethink what the strategy is for the next 5 years. I mean, this is a strategy we've been executing for 20 years, actually, but it's really picked up in the last few years just because the volume of companies out there are high. The volume of DPI that's needed in the venture industry is high. And so that's creating, I think, a whole kind of new set of types of deals. And I think, the beauty of this business, if you think about, go back 5 years, there wasn't really a secondary market in venture. there wasn't a secondary market for continuation funds for venture assets. I mean, we did the first big one. And so I think the exciting thing is, even though we're 30 years in, there's still innovation. There's still new things, new ways to kind of use markets, exploit markets, new markets to kind of go find, but also new ways to exit. And so I think the reason I still kind of love what I do is I don't think there's been a day since I've been at Insight that I didn't learn something new. Right. Whether it's something about a new industry, a new type of deal structure. This morning, with very little sleep, had to deal with a very thorny management issue, and that's still interesting, right? And I think the thing I think about a job that makes it boring is when you start feeling like I'm doing the same thing every day. Like, I don't really have the same day any day, and as long as I can kind of keep doing that, this is kind of a pretty kind of exciting thing to do. So I think that if you think about any other industry, no other industry has had 30 years of uninterrupted growth through every recession that's legal.
Yep.
Right. And so, I think the prospects for the next 10 to 15 years in software continue to be high. Now, that being said, and you and I talked about this earlier, I think in the venture, all that being said, I think the next 10 or 15 years, the next 10 for sure, are going to be a grind.
Yes. We
all have a lot of assets that we paid high prices for that we really got to focus on making work, and it's going to take time.
Yep.
And I think we all have to be intellectually honest about that. And I think one of the things that we often see in these cap tables is not enough intellectual honesty about what the company's worth today.
Yep.
That's what makes a venture buyout strategy hard, by the way, is like getting to a price that's rational.
Yeah. And last question, because I know your life is not all just investing in software companies and doing buyouts and all that, and there's a additional purpose in terms of things that you like to do that's on the order of philanthropy and helping others. Just talk to us a little about how you've been involved in and how you spend your time outside of Insight Venture Partners.
Yeah, like my wife and I have really gotten a lot more organized spending time on this. I mean, we set up a family foundation, and we have kind of two basic areas of interest. One, my wife spends more time on is kind of everything related to gender-related issues, but it became about reproductive rights recently, but it's about maternal health. It's all about all of those related things, and everything from storytelling, so funding documentaries, to actually provision of care. And my interest, which ties back to what I thought I was going to do in life, which was going to be an MD, PhD, is funding scientific research, right? So I do a lot of interdisciplinary neuroscience, metabolic psychiatry, kind of a lot of different areas. And that's been interesting. And then I've always had an interest in kind of government. So I've been pretty involved in Council on Foreign Relations and the Carnegie Endowment for the Peace. So I think it's really, really important in life not to have any one thing dominate too much of your brain. And I think all of these things that I do make me a better investor, right? So I don't think that I'm a less good investor because, as an example, like yesterday's board meeting at CFR was talking about defense procurement. It turns out a lot of companies these days are focused on how do I come up with innovative software and even hardware technologies that are focused on that market. So I actually can talk about that more intelligently. Did I join the board of CFR for that purpose? No, I joined the board because I thought it was really interesting. But I'm able to use that in kind of other ways as well. So I just always encourage people to read broadly, do things that are kind of outside the mainstream. And I've yet to find something that I've done or a hobby that I have or interest that I have or people that I've met that don't end up over time being relevant to whatever it is you might be doing.
Yeah. Well, Deven, thank you for making the trip out to LA, joining us here on the stage. Congrats again on Fund 13, and congrats on 30 years.
Thank you.
Many more. Thank you.
Thanks for having me, Kobie.